Hello traders, welcome to another day trading strategy video. In today's video, we'll be talking about cryptocurrency signal finder part 2. Reason I'm doing this video is it was my most suggested Patreon video, as you can see here. We had 5 votes for part 2, not much love for order flow part 3, and reading only 2 votes. So specifically what we're going to be doing today is I went down to here and I found that one of my patrons had mentioned that he wanted a cryptocurrency signal finder on TradingView for breakout trading. So what I'm going to be doing today is talking about a way that you can screen coins for breakouts and then how to trade directly into those breakouts with proper risk management. All right, so let's get started. So the first thing that you want to do, and again, you can just pause the video on any one of these right here, as you can see, because I'm not going to be spending a lot of time on this, so you probably should just pause the video here. But first, let me explain what these are. So the first thing that you want to do is choose your exchange and then go to the 1 day. Then you want to look for coins that have a moving average rating of buy or strong buy. That's pretty, you just hit this and you get these. Reason I say these, well, you want to find a change percent of around -5 to 10%. This is just how much percent changes happen in the past day. You don't want to see, when we're trading into a breakout or trading it into a consolidation, we don't want to see a crazy change percent of like 30%. We don't really want to buy that because if we do, that's not to say that the market won't continue going upward. It might, and it probably will if it's already moved up 30%. But how much more it will move upward is a bit into question, and especially a good risk reward is probably not going to be available to you if you're directly buying into a trend that's up 30% and then hasn't consolidated or retraced soon. I mean, recently, that's probably not a great trade to make. So that's why you want to look for coins that haven't really made massive gains recently, but maybe just slight gains or slight losses. You don't really want to see coins that have dropped a lot in value in the past day because that could be a sign of continuation of a bearish move. Again, we want the average directional index to be around 15 to 30. The 25 is the threshold for a trend. So what that means is that when the ADX crosses above 25, typically that indicates that a new trend is forming. When the ADX crosses below 25, typically that indicates that either a weak retracement or consolidation is occurring. When we get an ADX of around 15 to 30, that could mean either the market's consolidating or the market's moving into a new trend. Both of those are markets that we would likely want to trade. So that's why we want to see these values here. So let's do exactly that. Okay, so we see all these moving averages that are strong buys. So these are already on our radar. These already have ADXs of around 15 to 30, so these look like very good candidates as well. Let's look at the change percent. These change percents fall into our radar as well. This one does not. VRC BTC up 23% does not fall into our radar, so we probably don't want to be trading this guy. So we have these in mind. You can write these down. You can, these coins here, you can just keep them in mind, keep like 2 or 3 of them in mind, and then just search them here when we go on to the next thing here. So with those coins in mind, what you want to do for an entry is on the 1 hour time frame, we want to only look at coins that pass our 1D screening. So imagine you're like a TSA agent, and the 1 day, using these indicators here with these rules, this is what you're going to let through. And we only want to look at coins that have been let through. We don't want to look at coins that have not been passed through the screening. So we see these coins. So for example, let's take a look at XPM BTC and XMR BTC as well. So XPM, XRP, I don't think they let you do comments, that's fine. Okay, so XPM, now let's just go on the 1 hour and see how this coin looks. Okay, so we have this information here. This is probably not fantastic, and let me show you guys exactly why. We want to look for an oscillator reading of a buy. So we have that here with XPM BTC. We don't really care too much about the moving averages rating on the 1 hour. We care about it on the 1 day, but in the 1 hour, we want to see coins that are, again, moving sideways or moving downward. If it's a moving averages rating of a buy, typically that means that the market's already moving upward. So we don't really want to be trading a market that's already moving upward. We want to capture that move before it happens. So going off of this, we want to look for an ADX reading below 25. We want to see that the coin is consolidating or retracing after a powerful up move, with the 1 day being in the uptrend. I don't really see that here. I see a very high ADX, so this isn't really something that I want to trade. Let's look at XMR. This is just how you would do it. You would just look for multiple coins and look at their ADXs. Perfect. Awesome. The ADX here is 18.58. That is below 25, meaning that the coin is probably consolidating after a very strong move. That's just what I'm gathering from this information here. Let's actually look at XMR BTC. So XMR BTC, yep, we have a strong move, and then we have consolidation, just as the signal finder had pointed out. Resistance, resistance, support, support, minor support, minor support, minor resistance here, potential minor resistance that I see there. So this would be a trade that we could take, but let's look a little bit deeper into the other values here as well. So I didn't really want to put a rule for volatility, and that's the indicator that you see right here. That's 6.18%. Let me go back to this guy. High volatility above 10% typically indicates the price is breaking out or has made a very strong move recently, whereas low volatility of around 0 to 10 typically indicates just consolidation or weak retracement. The volatility here is only 6.18, which is good. That means that the market, again, in the very short term is probably just moving sideways. Not much momentum upward, not much momentum downward. We don't want to see really either if we're trying to trade a breakout before it occurs or right before or right when it occurs, actually. So this does pass that threshold here. This does pass a reading here. Plus DI must be higher than minus DI. This means that there must be more bullish momentum than there is bearish momentum. Let's take a look at that as well. Yep, so we have the plus DI is barely higher than the minus DI. You probably want to see a higher difference between these. This would mean that the bearish momentum is just about almost as high as the bullish momentum in the recent past, as you can see here. And I think that can be indicated by this right there, this right here. They're just about equal, with slightly more bullish momentum on the hourly with these guys. But regardless, this does pass all of the tests for buying into a breakout XMR BTC. One thing that I do have to say is that I'm not condoning anyone to buy or sell any of these instruments. All that I'm talking about here is the indicator itself and the screening that you're doing for these coins. But I'm not telling you guys to buy XMR BTC, of course. I could say that I myself might buy, but I know I can't tell you guys. Would not be good to say like, hey, buy here. That is not what I am doing. Yeah, so this all checks out. I myself might buy here, and the way that I would do that, there'd be two ways. One, I could target a minor retracement after it passed all the screening tests. A minor retracement could be anything like on the 1 hour. Well, it already did hit 61.8 there, as you can see. Boom. But a really minor retracement that you could target as well would be something like this. Like try to trade the 61.8 around 314 too. And then just put a buy order here or slightly below there. And then maybe put your risk, put your stop loss right there. So that would be a risk reward if we were to buy in, like there. That'd be a risk reward of just about like 4.5% loss. And then the target would probably just be a Fibonacci extension upward. That's how I personally would probably do it. But I also wrote in how you could do it using the signal finder as well. So I would probably just target that level there. It's the 1.61 extension of consolidation of this market move. And that reward would actually be about, 3.142. That reward would be about looks to be about a 10% reward. So that'd be a 10% reward, a 4.5% risk. With that'd be a risk reward ratio I think of like 2.1 or 2.2, which is definitely a good risk reward ratio to have. We want to have a risk reward ratio that's greater than 1. We don't want to be risking more than our potential reward. So this would be a candidate for a trade, for sure. And one last thing, exit? Question mark. I did talk about how I would possibly exit this using Fibonacci's, but another way you could just exit it using TA would be to use this way. Again, you can use this method on the 1 day or the 1 hour. It's completely your choice. You're going to want to find an oscillator reading of a strong sell. This is going to indicate that the trend is overbought across multiple oscillators. And if multiple oscillators are overbought, typically that's a pretty bad sign for the trend to move higher. So that's a possible exit, sell immediately kind of thing, or put a limit order slightly above price to try to get out of that trade. Also, I said if minus DI ever gets larger than the plus DI, I would use this more on the 1D though than the 1H. This would mean that more bearish momentum is entering the market than bullish momentum. When these crossovers occur, and if you've ever traded DMI, Directional Movement Index, you would see that when that quick bearish momentum occurs and then the minus DI crosses over the plus DI, that could signal a full-on reversal for the market. So that could be another way that you could exit this. And again, the final way that you could exit the trade, probably not the way you'd want to exit a trade, is if your stop loss below support gets hit. No one likes to take a loss, but not putting a stop loss when you're trading any method can be near suicidal, especially when trading altcoins that can just like drop many percents very quickly. So this is the not so fun part, the stop loss part, but it's just something that you have to do. Because if you don't, you could really get trapped into a position that you don't want to be trapped in a position of. And also, if you do take a loss, you could just go right back to the signal finder, reevaluate your method, look for more coins to trade, and then find another profitable setup, and then you can just trade that setup instead and get into a coin that's already in an uptrend, buying a consolidation, and then you'll probably easily make up, the loss that you just had, if you can just keep a clear head. So I think that's going to be it. We went over how you can screen for the uptrend in the 1-day time frame, and finally how you can screen for an entry. One more thing on the 1D. What you probably want to do to start off with is when you look at these coins that do check off all the boxes, like 15 to 30 here, like XPM, and you also can trade the buy as well. It doesn't just have to be a strong buy. You probably want to look up these in TradingView to begin with, just to see what they look like in the market. So Omni USD, I'm just going to look at that. And let's do Omni Bitcoin because this is just calculated by TradingView. So this is indicated as a potential trade, and I'm glad that it was indicated as that on the 1 day because I see a strong up move with a very weak down move. Price is having a harder time moving lower. Price is having a much easier time moving higher. This is likely to mean the price is going to have a much easier time continuing higher right here. Typically, that's what's occurring. Also, we have some more long-term consolidation here. On the daily, looks very strange. This is a very weird daily chart. I haven't really seen one that looks like this. But regardless, this does look like the beginning of a potential uptrend. And that's why I think this was alerted right here. Omni USD was labeled as a buy for the moving averages because the uptrend might be beginning, and that's why it was labeled that way. So and it has a great ADX as well. And here the plus DI is higher than the minus DI, but this is the daily. And again, just one last example to send you guys away with. Omni BTC on the 1 hour. Yep, so we have a buy and a neutral for oscillators reading. That is good. We have a very low ADX. That's okay. We do want an ADX below 25. An ADX that low does mean that a lot of momentum has not occurred in the past. But if you do like trading breakouts and trading the very beginning of a trade, of a trend, then this is a really good ADX for you because this could signal the very beginning of an uptrend. But this is not great. Equal DIs is probably not what you want to see. This is a little bit prettier. Plus DI is higher than minus DI, and you get these as well. So Omni USD and Omni BTC would probably be a good trade to make. Stop loss below support for potential risk of like if you put your buy order at support here. Stop loss below support is a lot, about like 11%, and then you could target a potential gain using these same things for screening for an exit. You could your gain can be quite large from this, as you can see. And again, if your risk is quite high, like 12% loss, then all you need to do is just adjust your capital relative to risk. So for what I mean by that is, if you're trading a coin like Bitcoin, that's just completely a vacuum example here. If you're trading a coin like Bitcoin that your potential risk, your loss could be like 4%, you could just trade with your normal amount of capital. But if you're trading altcoin that has a stop loss of around 12%, you don't want to be trading with that normal amount of trading a capital that you trade with. You could trade with half or a third, and then you're having a little bit less exposure to a massive loss. You can just the risk reward. The actual percents don't matter. Like this is a minus 12% stop loss. that's heavy, that's a lot, but you would just be trading with less capital. And then your exposure would actually be a little bit smaller than usual. So yeah, so you would just have to adjust your risk accordingly to your methods. Okay, so that is going to be it for this video. We have gone over the full way of how you can trade breakouts, how you can trade into consolidation, how you can trade weak retracements. Uh, Basically, just to put this in like a too long didn't read kind of context, look for a coin that's in an uptrend. Look for the coin in an uptrend on the 1 daily, on the 1D. Then look for a coin on the 1 hour that is either weak retracing, kind of like looks exactly like that, weak retracing, or is moving sideways in consolidation. Both are fine. Once you see that that is occurring, you want to make sure that other factors are met, like ADX and volatility and plus DI and minus DI. If those factors are met, then set your buy order ready, and you can enter the trade. And that's basically the strategy for trading breakouts or continuations of a trend. All right, if you guys enjoyed this video, then feel free to check out my Patreon. And if you guys ever want to suggest more videos or vote on something, I'm more than happy to take your video ideas and make them into a reality. So yeah, that's gonna be it. And have a great day or night, depending on wherever you are.